Hi everyone, it's Evan here from the Trade Risk on Friday, March 10th here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. I hope everybody had a great week trading. This video is probably going to be a little bit on the shorter side. I've put out a few videos yesterday and the day before on the market, my thoughts, and I don't want to keep pushing out the same information to you guys. The levels haven't really changed, so I can probably summarize this a little bit quicker in this weekend's video. And if you haven't seen those, you can subscribe to our channel. You'll get all of our updates every time we publish a new video. So with that, let's jump into the charts here. S&P 500 finishing off the week with a little bit of a pop to the upside. You can see we're up 35 basis points here on Friday. Before we get into that, let's look at the weekly chart. Let's see where we've come from. It was the first red close, so the first down close that we've seen since a couple of months, since January 20th. This week right here was the last time we had a down closing week in the S&P 500. So that's pretty significant, just in the sense of the historic sort of run that we've had. It's nice to see some downside action coming into play here, starting to work off those extreme overbought conditions, and it's healthy. And you can see with this session, with this week's candle, we tried to pierce, or we did pierce below last week's lows, but we did see a bid there, and we kind of pushed off of it and closed near the week's highs. And you can see on some pretty standard volume there based on the 50-day moving average. So let's look at the daily chart, and the Monday is right here. This is where we started the week. We had already been pulling off a little bit off those highs from last Thursday and Friday of the prior week. So we came in Monday, a little bit more of a downside action. Same thing on Tuesday, same thing on Wednesday. And Thursday, you got that reversal, tagged this support. We talked about the support level in our midweek recap, this 235, call it 50 area right down here where we chopped around for a few days in late February. And we did tag that yesterday on Thursday, intraday. We had a little bit of a violent shakedown to it, and then a sharp reversal to close towards the highs of the session. And that got some follow through on Friday off of the jobs data that came out. So all in all, we actually had, and this is pretty remarkable to say, and I mentioned it in yesterday's video, but we had, and we still do to some extent, some oversold conditions. I can't even say oversold because my mind's always programmed recently to just say overbought, but we actually had some near-term oversold conditions coming in here Wednesday and Thursday of this week. And specifically on Thursday, we did get that reversal. And then Friday, we unleashed a little bit of that energy back to the upside, kind of unwinding that spring. But we did get short-term oversold in here. And again, speaking on the short term, if you're a long-term holder, then you can probably ignore that and forget about it because it's not so significant for your time frame. But it is healthy to see, or it is nice to see a little bit of an unwind here on Friday. Let's see if we can continue this action higher now. We have a reference point, Thursday's lows, right around this 235.70, whatever these lows were, 235.74. So that could be a good line in the sand for you. Let's see if the bulls can get us back and retest these highs. Let's see if the trend can continue back to the upside, at least retest these highs. That would be interesting. We have a very busy week next week for the Fed. We have quadruple witching. There's, I think, some other data out there on the macro side. So it's going to be a pretty busy week, and that could keep a tight lid on price until we start to move through some of those potential catalysts before the market gets to digest more on the Fed's rhetoric. I think we all, or the market certainly, is pricing in a hike for this month, but what's going to happen for the rest of the year, I think that's the more interesting rhetoric that the market's going to be looking for and analyzing. So with that, on the downside, 235.70, back on the upside, you're looking at these old highs here right around 240, right underneath 240. And I think that's a reasonable range to consolidate in. If we did get a knee-jerk reaction lower next week, if the market doesn't like what it hears and we start breaking below these lows, that would that should open up a little bit of panic here and could accelerate lower. But again, when you look at those bigger time frames, the trend is your friend here on the intermediate and longer term. So it wouldn't be unreasonable to expect that dip buyers would be interested if we do get a pullback meaningfully back down to this 230, lower 230 levels here in the SPY. But anyhow, that's getting a little specific to the individual, your time frame and strategy. Let's take it by the next week and look at this near-term price action. The levels again are clear. Pay attention to that. Pay attention to the catalysts on deck and the market's reaction, and sort of plan accordingly. As far as the way we're positioned, we came into the week net short, holding that IWM and a few other things. We did cover that position up this week, and we are now back fully on the long side, looking to see if we can get some more continuation higher, again back to the upper end of this range. If we do start to stumble here and start breaking below Thursday, Friday's lows, then we'll reevaluate, cut that exposure as needed. So that's the way we're looking at things. Let's look at IWM. This was, again, this is where we came in short. We covered the rest of our position here on Wednesday. And you can see it did continue to sort of drift lower here throughout Thursday and Friday. The volume has been picking up just a little bit over the past few days. It's in the vulnerable sort of danger zone. If we go to the weekly chart, I think here's what's interesting, and we put out a post on Monday about this, but last week we had the outside kind of poked our heads up to new all-time highs, reversed and closed near the lows, closed actually red on the week, was the only index, or actually closed flat on the week, it looks like, that didn't make any forward progress. And then today, or this week, we got the confirmation lower. Take a look at volume here on the weekly time frame. You can see a slight uptick over the past couple of sessions, and this is more on the bearish side as we broke back down into this range. So we're going to be interested, can the dip buyers come back in, support IWM? Does it just continue in this range that it's been in for quite a while, with support down here around 134, or maybe the lows from this week will hold and will eventually, find some support and try and retest back to the upside? I think the level again here is clear above 138, and you're back to sort of sunny skies and some bullish momentum that could start to develop. But as long as we're as long as we're sitting below and trading below this area, I would want to be certainly cautious. And again, this continues to be the laggard on the year. Let's see, it's actually only up 0.82% now, so not too far away from going red on the year, which would be a pretty interesting divergence there with the small caps. So something you want to pay attention to into next week. I still think it's one of the most interesting averages that we have right now to pay attention to. The Qs are just super resilient for all the wrong that the small caps are doing. The Qs are just picking up that slack on the upside, and they remain extremely resilient. Looks like we did get a new closing high here in the NASDAQ 100, so very impressive action here this week, and continues to really just outperform and hold up high and tight. You can see the levels here also pretty clear. A lot of consolidation taking place above this 130 level, so you get a pretty good line in the sand, 129.50 to 130. If you started to lose that zone, then you'd certainly be dropping out and losing that upper level momentum. So that's the market environment. Let's take a look at what else has gone on here. TLT is back to an interesting spot. It's actually back to the lows from December. So we broke down from this rising trend line that we had drawn in here last week's video, and we came all the way back down to the lows of December, and you got a little bit of a hammer, a little bit of a reversal here on Friday. So could this be the low? It could be. It could be a double bottom, and we're going to start to lift higher from it. It would sort of be against conventional thinking right now, particularly as many are thinking we're on the path of just increased rate hikes. So that would be very interesting. I have no opinion as far as as far as the fundamentals go for the bond market, but I will be watching this area to see if we start to lose it here, if this is or if it does continue to find support around 117.25. Something certainly to pay attention to. It is at an inflection point. Weekly chart does look very vulnerable, very dangerous here. That it could that it looks like it has a greater chance of rolling over, but again, we'll have to see how it all plays out. So something to pay attention to there. USO, we've touched upon this in Wednesday's video, and man, all of this consolidation, all of this energy just being unleashed to the downside here. Look at the big uptick in volume, range expansion to the downside. I believe oil is trading at around 48.50 now, and the lows here from November, December, I believe come in right around $45 a barrel. So we might be heading back down to the bottom end of this range. Certainly seems like it. We're more than halfway there to retest this $45 area down here around November 2016 lows. So certainly seems to be in motion. It is stretched near term to the downside, but that is what you should expect when a market so tight and so long and a market that is generally more volatile eventually starts to break down or break out in any direction. So USO momentum to the downside stretched, but you might have a target down here around $9, maybe 90 cents in USO. If we go to we did TLT. Let's go to UNG. Continues to find support. This is a kind of a tough one. It hasn't been a very clean trade. We've certainly talked about it, but this one continues to just kind of levitate higher. Volume pattern looks pretty interesting here on the bottom as it started to break back below $7. So this one continues to climb. It's tough to chase. I couldn't get behind it, but it is continuing to work there in the short term. So if you're long it, I guess you continue to trail stops on shorter time frames, but for now, I think you still need to be careful. The 8 and 20 are starting to curl back up. I'd rather see, a retest of these lows down here, get proof that they are at least good or solid or have been retested once, and then look for that long trade if it presents itself. So that's UNG. Next, let's look at GLD, which finally did get a little bit of a reversal here on Friday. This one's been sliding for the past couple of weeks. I like the potential of gold. I mean, it's kind of just reversing here in no man's land. I don't see much reference point down here, so it'd be interesting to see just how it handles itself. 8 and 20 periods still curling lower, so again, this one's tough for me to just want to buy right here just because we had our first kind of reversal day, but something to pay attention to. And silver's in that same situation. It's been selling off a little more of an interesting level here, right around the 16.30, 16 and a quarter zone. If we can start to get back above there, starts to pique my interest, but again, you still have plenty of near-term damage. 8 and 20 periods still very fastly kind of unraveling lower, so got to be a little bit cautious, but might get a bit of a bounce here in GLD and silver heading into the next week. So with that, let's look at some of the individual sectors. The standout semiconductors by far breaking to new highs here. It did, it was in this consolidation pattern back here on Wednesday the 1st. Remember, this was one of the few individual sectors that didn't make a new all-time high with the market. So with the S&P 500 breaking to new all-time highs here, excitement everywhere, semiconductors actually didn't really break to a new high. They just continued to sort of put in a lower high and consolidate down here, and it looked like they had the potential for rolling over, but that bid is still relentless here, and you did get a new closing high here, new all-time closing high here in the semiconductors. So still plenty of strength. If we start to lose 76.70, something around here, that's when you can now sort of trail your stops and gauge that upper level momentum. XLV Healthcare, we've talked about this for the past couple of weeks now, continues to outperform and continue to chug along to the upside. XBI, this is biotech, the equal weighted, was actually up this week, I believe, which was pretty interesting, up just slightly. So you can see this is outperforming, starting to bump its head up against this 71.50 level. So that's something interesting to take note of. It's been in the uptrend, continues to be in the uptrend. A little bit of outperformance there relative to IBB, which I think, was down on the week. So keep an eye on biotech. That is sort of interesting, and the staples continue to remain resilient here, finding some support down close to the 20-period moving average. So those are all the bright spots as far as sectors go. On the downside, you got IYT, the transportation average. This has got pretty hit this week, down 2%. Found a little bit of a bounce here on Friday, maybe on this rising channel that it's currently trading in. So something to pay attention to. Little bit on the weaker side, but let's see if it can stabilize around 166. You can see the sell volume over the past few days got a little bit high, but nothing too extreme just yet, something to pay attention to. One of the laggards on a relative basis. IYR, here's another one that is lagging quite a bit, kind of waterfalling off of the $79 level once it broke back below it. So this one looks pretty vulnerable, a little bit stretched to the downside, but a little bit of an uptick in volume as it started to sell off this week. And then finally, energy. Put out a post on it this week. Of course, crude oil getting crushed, and energy certainly in the crossfire in that regard. You can see it's trying to hold on here at this rising trend line, this 10-month trend line that extends from about the March lows of 2016. So something to pay attention to. It's at least a nearby reference point. Had a nice high volume reversal day on Thursday, and for Friday it held in most of those gains, so could have some reversion here. Maybe it's stretched, maybe this energy stocks that are already down over 10% from their highs, maybe they've already had enough, they've priced in the damage here in oil, and maybe this is something that's interesting. I'm not willing to, we have no position in this whatsoever. I'm certainly watching it, have positions in a couple of the individual names, but not on the XLE in general. So we'll have to see how that one shakes out, but could be presenting some opportunity for us there. So that should do it. That is this week's recap. Again, I hope you guys had a great week trading. Enjoy the weekend and hope to talk to you again soon.